Greetings, everyone, and thanks again for joining us for another episode of the development context of sovereign credit ratings by UNDP Africa and Africatalyst. This podcast is part of the UNDP Africatalyst Credit Ratings Initiative that is aimed at supporting African countries navigate credit ratings processes, methodologies to be able to access affordable financing and finance their development initiatives at home. Now, the credit ratings play a significant role in shaping the economic destinies of countries, especially here in Africa. But there is always a question that, is always hanging, which is whether these ratings truly reflect the complex realities of development in Africa. That is what I think we will be able to answer today. In this episode, we look into the limitations of current rating methodologies, discussing how they often fail to capture the nuances of progress in areas such as governance, infrastructure, and social development. And what that means, we'll find out shortly. I'm joined by our guest, Zuzana Schwidrowski, a former credit ratings analyst and also the current director at the UN Economic Commission for Africa, ECS. Zuzana brings a unique perspective, exposing potential biases, maybe or maybe not, and helping us understanding some of the misconceptions or what we could be missing in this context. We hope to explore how these nuances affect investment decisions, policy choices, and Africa's overall path to sustainable development. Zuzana, thanks for making time for us and welcome to the podcast.
Thank you, Maggie. It's an honor to be here. Thank you very much.
Yeah, it's been a pleasure also working with you in the past. We've worked with this year as part of the Africatalyst UNDP Credit Ratings Initiative with workshops and some of these conversations we've had, but it would be nice to reshare them with our audiences. I know you've been extremely passionate about, understanding the development context within the credit ratings space. So from where you sit, what are some of the key misconceptions you probably have seen or observed about African economies when it comes to ratings processes? As a former ratings analyst, but also as somebody who is now in the economy with the ECA, working closely on development in Africa.
So I think we can start just by looking at the investment patterns in Africa, and we see, and it's been shown in research, that to some extent we are observing herding behavior. And that also means that investors don't always have accurate, information, because financial markets in Africa are still not fully efficient. They often are thin, so they follow each other. But that also means that actions such as credit ratings can have externalities. And if they are so, whatever happens in Botswana may, impact the investor's perception for the entire Southern Africa or even further. And if there are such externalities, there is also a good reason for, public agencies like United Nations Economic Commission for Africa to get involved. And so that would be some of the challenges for Africa. But on the other hand, there is also a need for capacity building for African countries and African policymakers to really understand what a credit rating is about and how it can actually help them. So it can actually facilitate development, and it is often necessary step for accessing the international capital markets. And we know that financial development is really a very key step it's not a step, it's a continuum or process for economic development. So in that sense, it's needed and it can be useful. For African policymakers, it should be clear, it is not about every development complexity that the credit rating is trying to address. So the credit rating has fairly narrow focus. It's about ability to repay on the Eurobonds or on the debt obligations. So willingness, ability, and this is what credit rating really assesses. So it's not trying to assess everything and the complex development and some of the very, good progress that African countries are making. But if they are not directly or closely related to ability and willingness to repay, they will not be reflected necessarily in the credit rating.
Yeah, thank you so much for giving us that foundation. So, it more looks like, on one hand, the credit ratings agencies are not having the full picture of development for the countries. On another hand, it seems like African governments are not providing enough data. That's when you talk about capacity and probably working around the methodologies. And this is where we're coming, obviously. That's why we're also having this podcast. But what are some of the practical steps that need to be taken for these to align? For the agencies to be able to really see the full picture of the development context of these countries, but also for governments to really understand that this is what they're looking for. So how do we give them what they want?
I think some of the kind of shortcomings of the credit ratings are often they take short-term perspective, and Africa unique strength is actually its longer-term potential. But that potential is not necessarily taken into account in credit ratings, and that potential is also difficult to turn into financial capital. Often, we don't see much local presence in Africa among the global credit rating agencies. So that probably constrains their understanding of the context and nuances. And I already mentioned the hoarding behavior of the investors. And they also don't necessarily take into account the integration efforts that Africa is undertaking, and in some areas, like for example, East Africa, succeeding, because rating is often one of the important indicators is GDP per capita, but also size of the GDP. And if we, of course, take integration, that kind of mitigates this factor if for small countries. And I think ultimately, to some extent, because of the limited knowledge and perhaps also limited interactions, there may be some underestimating of Africa's capacity to undertake reforms and also the ability and willingness to repay. Three big ones have been around for a very long time, for over 100 years. And of course, Africa is now having its own efforts, and it's very timely. They can also learn from the experience of the European Credit Rating Agency. What are some of the challenges to establish own credit rating agency?
Yeah, and I mean that brings me to my next point. To what extent can an African credit rating agency really work for African countries, which is something that has been, brought up by the African Union. I was speaking to someone the other day who said to me, China has like 52 credit rating agencies. I said, oh my God. And we had such a detailed conversation and looking at, what are some of the lessons the continent can draw from that. But there seems to be a question of to what extent can it be credible enough?
Mm-hmm. Exactly. So, the credit rating agencies, they are basically issuing opinion to investors on the, willingness and ability. And you mentioned the credibility. So this is really critical. But at the same time, I would say, this is a really good time given all the upheavals in the global economy, changing landscape, shifting partnerships, uncertainty about tariffs. So it's really a great moment to have another opinion on the Africa situation. So in that sense, having diversity of opinions, bringing the Africa's perspective can be very useful. But again, looking at the European Credit Rating Agency, it's clear that patience is needed, and it will be a process, and it will not necessarily happen immediately. So that needs to be taken into account. But the credit rating agency can also have important role in building up capacity of the Africa's policymaker, which is where we say there is some gap. By sharing the methodology, and also for the African policymakers, it's very important to strengthen their understanding of the methodology, and also strengthen the understanding of that sustainability analysis, which also is being revamped by the IMF and World Bank. And perhaps institutionally, it may be useful to have a dedicated unit at each Ministry of Finance or similar institution that really focuses on the credit ratings, prepares the data, etc. While the MDBs and international organizations like ECA can help gather, for the continent, the relevant data. If they combine forces and each has part of the data, so then the African countries come really prepared, and the governments and also the private sector credit rating agencies, talk to many players in the economy. So, coordinated preparation is very important. South Africa is the country that received the first credit rating in Africa. So it has now, I think, 30 or so years experience in credit ratings. And I recall that they always organized themselves very well. So the private sector, would either meet or there would be a separate but coordinated meeting of the private sectors, also from various government agencies. So usually excellent preparations for the rating visits. So it can share this experience with other African countries.
Yeah. Zuzana, from hearing you really break this down, it almost is clear that we might need to have some key priorities, especially when it comes to Africa's rating processes. And I just want to ask you, not in your shoes at the ECA, but in your previous work as an analyst, do you think or do you believe what's needed and what's key is capacity building and data for countries? Because from how I'm listening to you, it's more like, even with the African Credit Ratings Agency, there's much more that can be done in terms of empowering or supporting countries. From what you said, do you think this is one of the biggest key challenges that we really need to focus on?
Yes, and I would take a broader picture. For countries, I would not necessarily go by what the credit rating agencies want. Countries should focus on their own development. And we see ultimately, so that will take time, but ultimately the credit ratings are closely correlated with GDP per capita, or actually also with Human Development Index. So by taking this approach, not doing it for the credit rating agencies, but doing it for their own development. And many times these actions are similar. But as I said, also seeing more transparency and training on the credit rating and what factors matter at what stage is important. For most of the, downgrades to the C category and defaults, it's really a matter of access to liquidity. So as a precautionary measure, countries should also work on having alternative sources of liquidity provision in case, this is needed. But then also that's preventing the downfall, but while patiently building some of the factors like institutional strengths that requires time and efforts and patience. So while building these factors going forward, and of course, fiscal management, etc.
Yeah. You talked about the changing global economic landscape, which we are all seeing, especially now, is very critical. We're looking at a lot of things shifting from rising interest rates, debt crisis in Africa. We're having the climate risk. We're talking about looking for money for adaptation, for mitigation, for this and for, so it's going to be more and more boring. And with more and more borrowing, with a changing environment at the moment, also comes with rising interest rates. How does this all fit into the conversation we're having of reviewing Africa's, sovereign ratings? And how do we go about it?
Yeah, so I think we should also maybe look at some of the positives that have emerged. So Africa has recovered, and quite impressively, from the COVID and mostly from the COVID and the poly crisis. But the growth remains below potential and below what is needed for reaching SDGs. But then there are huge differences between subgroups, with some groups faring better. And also on the debt side, we see that the debt to GDP has stabilized and actually slowly started to decline. So there are some positive things we can highlight. And also the trade is recovering. And we see it also in credit rating. So in fact, the tide seems to be turning. I would say after the commodity price shock in 2014, 2015, more or less the rating was more or less for many countries, with few exceptions, on the downward path. But now, in the last year, we have finally seen some positive action. So, for example, for S&P, there were 11 positive foreign currency rating actions in 2024, including and for Moody's as well. For example, upgrade of Cote d'Ivoire, that is a positive action. S&P put positive outlook on Morocco, which is just notch below the investment grade, but it is a mixed bag because, for example, Mauritius now has, I think, recently received negative outlook from Moody's, and it is on the last grade for the investment grade. So we should focus on the momentum and really build on it and see this tide turning. Capacity building will be important part of that. And then, of course, what countries do. And, since rating is relative, we should keep that in mind. If African countries manage the situation well, and some of them are, then, this can actually be positive for their overall rating.
Yeah. So it's not all dull and glum. So, we've talked about the need for a more nuanced understanding of economic performance in Africa, and that includes the social, environmental factors, human development, and other parts of the economy. Talk to us about the role of international organizations and stakeholders in promoting a holistic approach towards African countries. And maybe, I don't know how the private sector plugs that in. I don't know if it's something that, we can also talk about as we're coming to the end of the podcast.
Well, the private sector is important for growth and, for the financial market situation, etc. So it impacts many of the key criteria of credit rating. So we have the economic strengths, the fiscal strengths, the institutional strengths, and then the risk of sudden events. So the risk of sudden event most often was the limited access to liquidity. Now, international and regional organizations have very important role to play by, again, building the capacity, but also talking to the credit rating agencies and trying to bridge this capacity gap. Because what we hear from African countries, even for those that have been in rating for decades, like South Africa, that they want more transparency on the methodology, but they want also better understanding of the judgment, because there is the quantitative part that gives some rating range, but where within that rating range the rating actually ends up is due to discussions in the committee and so-called soft factors and adjustments. So I think countries would like to have a better understanding and also provide their own perspective on these adjustment factors.
Yeah. Zuzana, thank you so much for joining us on the podcast today. And as we always say, we hope that the listeners are able to go beyond just the credit ratings as a whole and really understand some of the nuances behind, but also looking at other factors that there is within. It's really a pleasure to have you, and we hope to be speaking to you again probably on another topic. And for those joining us, thanks again, and thanks, Zuzana.
Thank you very much, Maggie, and we are very happy to work with you in ECA.
Thank you very much. Those listening, thank you. You've been listening to the Sovereign Credit, the development context of sovereign credit ratings, a podcast by UNDP Africa and Africa Catalyst. I'm Maggie Motesi, and see you next time.